So in the previous lesson, in lesson 4, we covered trends as well as ranges. Today's lesson number 5, we'll be talking about breakouts versus fake breakouts, or rather fakeouts, and how to avoid getting trapped. So this is a stage where most beginners lose money because they are chasing breakouts, and today we'll ideally fix that. So today we'll just be looking at the Solana 15-minute as well as the 4-hour chart. And just like previous lessons, all lessons will be held in a step-by-step format. Today's lesson being 5 steps. So step number 1, what is a breakout? A breakout simply happens when price moves beyond a key support or resistance level with strength. It is not just a wick, it is a strong candle close beyond that level. So visually, how does that look? I'll show you guys now. So for this example, we'll be looking at the resistance on the 15-minute of Solana over here. So that is my resistance, and as you can see over here, I'll just move the chart to the side. We have broken above that resistance level and closed above it and showed momentum, meaning this is clearly a breakout. Ideally, a breakout should close outside the range, which it did over here with this candle. It should show momentum, which it did with this long candle as well as the following candle, and it should ideally hold above this resistance level, or if it was support, it should hold below that support level. So step 2, what is a fake out? So on the fake out, it will just be better on the 4-hour over here. And just delete this. So a fake out, I'll be using support over here on the 4-hour. A fake out basically happens when price briefly moves beyond a key level but returns quickly back inside that range. So over here you can see I marked out this 4-hour low, otherwise known as 4-hour support, and as you can see, price pushed down past the support level over here, and actually 4 different candles has pushed below it, but all 4 has closed above and it has pushed up higher. This is a textbook fake out. Fake outs or fake breakouts trap impatient traders and they create liquidity for the real move. So you might be asking yourself, what is or why does fake breakouts happen? And that is where step 3 comes into play. So the market moves by seeking liquidity, and where does that liquidity lie? In stop losses. In most retail traders, stop losses. So for resistance, stop losses will sit above resistance, and for support, stop losses will sit just below it. Price often pushes slightly beyond these levels to trigger those stops before reversing. As you can see over here, most retail traders would have taken a buy straight off support, and they would have gotten stopped out over here with all 4 of these wicks. So that is your impatient retail traders getting punished for not waiting for confirmation. So that's why the market can get liquidity over here like it did, so that it can push up and create a real proper move. So markets only move where liquidity exists. So now how to avoid actually getting punished like these guys over here? That is where step 4 comes into play. Do not enter immediately on the first break. Always wait for confirmation. I'll actually move back to the 15-minute for this one. Resistance over here. Yeah. So do not enter immediately on the first break. Always wait for confirmation. How does confirmation look, you may ask? It is either a strong candle close beyond that level, like the second candle over here. Just zoom in. Like the second candle close over here. Or it is a breakout followed by a retest which holds. And just like in yesterday's lesson, let me just get this going quickly. Yes, and just like in yesterday's lesson, you can see a clear breakout over here, turning resistance into now support and retesting and pushing above, right? So that is your two ways of waiting for confirmation, or rather seeing our confirmation, how it shows, right? So always wait for that confirmation. Never be those guys over here getting punished for being too patient, because I know I would rather be late and right than wrong and sorry. So that is your confirmation. That is step 4. So always remember, patience reduces traps. So moving on into step 5. Let me just delete this. Okay, I'll keep that. A breakout is only valid if it sustains. Fake breakouts punish emotional trading. As you saw with the 4-hour example, all those traders have hit stop loss even though they were right. So even though they got the direction right, they were too impatient, they didn't wait for any confirmation and just got stopped out. So before entering a breakout trade, ask yourself, did it close beyond that level? You can look at this over here. Yes, this candle over here closed above it. Did it hold? Yes, it's currently holding. Is structure shifting? Yes, it has basically. As you can see, this high over here, we took out these highs, closed above it. So now we are showing bullish. So ideally this does fit in with resistance turning into support, market structure shift over here, and now we should be good for buys, but that is not financial advice. That is merely what the charts are showing. So breakouts require confirmation. Discipline protects capital. So that is all for lesson number 5. Next lesson I think we'll cover risk to reward and why it matters more than win rate. And always protect capital first, growth comes after. Thank you guys, that will be all.